I'm Dawson Schmidt here with the latest stories and developments in this week's Commodity Roundup on Trader PhD. Grain markets are gearing up for one of the biggest data drops this year. Next week, the USDA will release its quarterly grain stocks and June acreage reports on Tuesday. Ahead of the reports, a Bloomberg survey of analysts estimates little change in crop acreage from the March prospective plantings report. The average analyst guess pins corn acreage at 95.1 million acres versus the USDA's March guess of 95.3 million. Soybean plantings are expected to come in at 85.2 million acres, up from the March estimate of 84.7 million. Meanwhile, all wheat and cotton acreage are expected to remain relatively unchanged at 43.8 million and 9.6 million acres respectively. For the quarterly grain stocks report, corn stockpiles are expected to have totaled 5.41 billion bushels at the beginning of June, up 16.5% from a year ago. Soybean stocks are pinned at 4% higher at 1.04 billion bushels. Meanwhile, wheat stocks in all positions are projected to be at 931 million bushels, up 9% from last year. Now, we will release an analysis of that report after its release. The U.S. says it is unfreezing Iranian assets, a part of a recent ceasefire agreement. Where those funds are spent are currently being debated. The U.S. Treasury says it is releasing $12 billion in frozen Iranian funds. Now President Trump emphasized in multiple posts that any unfrozen Iranian assets would go towards buying U.S. crops, and that would include corn, soybeans, and wheat. In response, Iran's foreign ministry spokesman contested Trump's claim early in the week, saying that Iran would use the funds freely in whatever manner it deemed appropriate. The existing memorandum of understanding also says funds can be used for any payment to any ultimate beneficiary designated by the Central Bank of the Islamic Republic of Iran. Iran buying U.S. grains could initiate renewed market demand from the Middle East, where reliance has historically lain with other countries like Brazil. U.S. agricultural products had mostly been locked out of the Iranian market since about 1979. Additional demand would also provide a boost to counter the uncertainty surrounding trade with China. Alongside unfreezing funds, the U.S. Treasury also issued an exemption to existing sanctions preventing Iran from selling oil, which now unlocks revenue dollars for the country. Australian beef exports to China will now face a 55% tariff after the country hit a tariff quota in June. China imposed a tariff rate quota on beef imports from multiple countries that began in January. Australian exporters were allowed to ship up to 205,000 metric tons of beef to China without a hefty duty. Exporters may have to find new homes for additional supplies, possibly directing more volumes to the United States, Japan, and South Korea. U.S. beef imports have already been running at a record pace this year, with shipments up 14% from 2025. According to data from the U.S. Census Bureau, Australia accounts for about 20% of U.S. beef imports between January and April. Brazil may face similar challenges as China's imports from Brazil have already hit half of its annual quota last month. Beef exporters are reportedly scrambling to assess if shipments of selected cuts to China can remain profitable once the quota is hit. The latest scrambling from major beef exporting countries is signaling how disruptive China's tariff rate quotas are having on global trade flows. Thanks for watching. I'm Dawson Schmidt, and this has been Trader PhD.